Thank you very much.
Hello everyone. Good afternoon. I'm very impressed that you are all here, to hear about taxes. If you were Spanish, no one would be here, so that already we can see a difference. And well, as David was saying, I'm a tax lawyer at the Spanish firm, Cuatrecasas. We do a lot of work with the US, so I have quite a number of US people living in Barcelona or living in Spain that need tax advice. And so we had, and Shane, with Thomas, we have no experience, many clients, and I hope that we can transmit that to you. And as David was saying, I think that we'll make short presentations, and what we want is that at the end there are questions. Well, if you have any questions, please ask us. So if we move, yeah. So basically, for you to know, if you are here more than 183 days, you are tax resident in Spain, at least under domestic legislation. If you have your center of economic interest in Spain, so more income, more assets in Spain than in the US, you are tax resident in Spain. And most of the time, you have a lot of assets in the US, you have little in Spain, but then you mostly are here tax resident because of the 183 days. It can be that in the US, because most of you must be US citizens, you basically pay still taxes in the US, and Thomas will talk about that. That doesn't mean that you are not a Spanish tax resident, okay? That means that you are basically paying taxes twice, and you have to deal with double taxation, and you really need to be advised on how to mitigate that double taxation. So Spain basically is, I would say, a little bit more expensive than the US in terms of income tax. Also, of course, depends on where you were tax resident. If you were in California, maybe that's not the case. Actually, you were paying more taxes, income taxes in California than in Spain. But in general, I find the rates a little bit higher. Or I find my clients, when we make the two calculations, actually paying a little bit more in Spain than in the US. Basically, the tax rates depend a little bit as well in the regions. Okay, Catalonia goes up to 50% on employment income. Savings income, which is interest, dividends, capital gains, they go up to 28%. Okay, they are both progressive. Then we have something called wealth tax. I always say that our wealth tax, if you want, it's a little like your property tax. Property tax in the US is very expensive. Our property tax is very cheap. What is the EV? Maybe you heard about it. But then it is true that we not only tax properties, we also tax worldwide assets, okay? Not all regions have wealth tax. Catalonia has wealth tax. There is an exemption of 500,000 euros per person, okay? But above that, you pay wealth tax. What is very important to understand as well is that there is a limitation in wealth tax, that basically if you have little income, you pay less wealth tax. So it's a matter of trying to control your income in order to pay little wealth tax. And everything is income except capital gains. So I don't know if you are familiar with the system, but then here in Spain we're always talking like, well, I need to generate capital gains instead of dividends and interest. Okay, so when we talk to Shane, we say, well, we want capital gains, we don't want dividends and interest. Okay. Then there is what we call solidarity wealth tax. It's basically a tax, it's a wealth tax as well, that it has been basically imposed because some regions, they said, well, we don't want to have wealth tax anymore, so we abolished wealth tax, like the case of Madrid or Andalusia. And then what the central government did is, well, I'm not sure I want that, so I impose a federal wealth tax. So basically, if you already pay wealth tax, like in the case of Catalonia, really this tax doesn't have much of an impact, but if you are in a region like Madrid or Andalusia, if you were not paying wealth tax, then now you pay solidarity tax. The rules are exactly the same. The exemption is 3 million instead of 500,000, which in some cases it might make a difference. Inheritance tax, for you to understand that who pays a tax, inheritance tax in Spain or gift tax, is the beneficiary. So meaning if you are resident here, you should pay on an inheritance even if all the assets are in the US, and even if the deceased is in the US. So that's important. And there will be ways to not be double taxed, but you should report in Spain an inheritance, even if everything is in the US, the only thing that is in Spain is you. Okay? Gifts is exactly the same thing, and gifts between spouses, they pay taxes. And we see this sometimes in the US, like, okay, I gave this to my wife, I gave it to my spouse, well, that pays taxes. So be careful with those moves. Reporting obligations, basically we start very early. We start in January with some tax forms, in March again, in June as well. The good thing in the US is that basically you cannot pay income tax in April, but you can postpone it till October. And that's going to be great in order to apply tax credits, in order to see how the tax credits work. If anyone wants these slides, please let me know. So I have a couple of slides to finish up on practical issues. So the first one, as I was saying, yeah.
So there hasn't been a change.
Oh,
yeah.
Sorry.
That's okay. I just wanted to quickly. Okay, good.
Sorry.
Okay.
So personal income tax.
Okay.
Should get it set.
Thank you.
So basically, no, I think the big issue for you guys is that you are double taxed. You are paying taxes in the US as a national, as a citizen of the US. You are paying taxes because you are a US resident. Okay, the treaty between the two countries should basically solve that. Okay, the way it solves that is that Spain should give you a tax credit for some of the taxes that you pay in the US, but only the taxes that the treaty provides with. For example, dividends, the treaty says 15%. So in Spain, we'll give you a tax credit for 1.5. But then you pay more taxes in the US because you are a citizen. But Spain will not give you a tax credit for the remaining part. And the treaty then provides that it's the US who will have to give you a tax credit for the taxes paid in Spain. Okay? But it's not Spain, not the way maybe we think is, I live here, so for the foreign taxes, I should get a tax credit. In this case, it's a little bit different because you are paying taxes not because you are a non-resident in the US, but because you are a citizen. So the way it works is that we give you a partial tax credit or no credit at all, and it's the US who solves the issue. And Thomas will talk about that. Okay. The use of LLCs, LPs is very common in the US. You basically disregard them most of the time. We do the same thing for income taxes. For wealth taxes, no. For wealth tax, you know if it has legal personality or not, which is the case of an LLC. But income tax, you look through it, we look through it. Okay. With trust, exactly the same thing, and this is very strange from a US point of view, but we disregard trust. So therefore, you should be declaring everything that happens in a trust. If you are the settlor of a trust, you should pay the income tax, you should pay wealth tax. If the settlor, basically the position is very simple, but if the settlor is there, it's the settlor who has to pay taxes. If the settlor is not there, it will be the beneficiaries who have to pay the tax. And this creates sometimes problems with tax credits, but the idea is we disregard completely trust, so you have to take that into account when you report in Spain. Okay. We see a lot of ERAs, Roth ERAs, pension plans. According to the treaty between Spain and the US, we should recognize foreign, not US pension plans as pension plans. Okay. As a pension plan, basically it means that everything that happens in the pension plan, you don't pay taxes. You only pay taxes when you get money out. When you get money out is employment income, so subject to high tax rates. Okay, and then the big question is that if a ERA on a Roth ERA or a operational pension plan, if they could be exempt of wealth tax, because basically we're discussing it before, they are illiquid assets. You really cannot go. A lot of times, you cannot go and get your money back, right? So then. There is, I think, a position that you could take that it's exempt of wealth tax. That's not the position of the tax authorities. The tax authorities are saying only the Spanish pension plan should be exempt of wealth tax. And then my last point I think I wanted to make is on Beckham law. this regime that is called the impact regime, Beckham law. It's quite attractive because you pay low taxes in Spain. It's a very nice regime for 6 years. Two things: it's heavily audited, so there are a lot of tax audits on Beckham law. What they are trying to, the tax authorities are trying to see is if you really are working, because basically the Beckham law, the whole regime is based on you working, and it does not apply to self-employed, consultants, services, all that does not apply. So just if any of you feel that they have a particular Beckham law, please let me know, because there is a lot of tax audit really looking into this tax regime. Okay, so for me, that's it. I don't know if I was short or long.
Perfect.
Can you run the slides once more? Just quickly. You just want to take the snapshots of the background, remember all these things.
But I can send it to you if you want.
Okay,
Yeah?
that's it.
Yeah.
Please don't read into this, but I get a lot of questions. What if you're an American here, illegally, over 183 days, and you're in the federal, so you're registered as having been here? At what point are you a tax resident, even if you're illegally a resident?
It doesn't matter if you're illegally or legally. It's not different worlds. So the taxes, they don't care if you're here illegally, right?
So even if you're here illegally, you have to pay taxes?
Yeah.
Okay. Got it.
Open-minded.
Very
It would
inclusive.
be a fantastic trip, no? I'm legal and I don't pay taxes.
Thank you.
So I guess Thomas is next.
Okay,
Thomas is next, yes.
Yeah.
So,
The same rules in the US. If you're in the US illegally and you're working, you have to pay tax. So it's not just a Spanish thing.
Thank you.
Anyway, so welcome everyone. I can't see anyone, but welcome. I'm gonna do a quick, touching. I'm gonna do like 5 minutes on US taxes. And then if anyone's got questions, you can hit me with questions. So essentially, if you're a US citizen or a green card holder, you're subject to US tax. You're pretty much subject to the same rules as you would be if you're living in the US. So your worldwide income is subject to US tax. That's assuming you make enough money, but we'll just assume everyone that's listening has a job or some kind of income that would require them to file a tax return. So as a US green card holder, citizen, you're treated the same. You have to file an income tax return. If you have to do an estate, if there's an estate involved, you would have to file an estate tax return. That, usually that's when you die, so hopefully somebody else will be doing that for you. And if tax returns, so all these returns that you would have to do as a U.S. citizen, you have to do no matter where you live. So you're living in Spain. The other sort of main point is that if you have over $10,000 in bank accounts, not per bank account, but in bank accounts outside the U.S., you have to declare that to the U.S. Treasury on what's called the FBAR. That's Foreign Bank Account Reporting. So that's based on your max for the year. So, for example, if you borrow 500,000 euros to buy an apartment in Barcelona, and the money goes in your account, and 3 days later it leaves, and then you don't have over $10,000 for the rest of the year, you still have to do this form. So, important. These are the two main responsibilities: file a return and to do an FBAR. So, next slide, please. So these are due dates. Generally, everything's the 15th. I see that it says the 16th because this year was the 16th. If the 15th falls on a weekend, it goes to the Monday following. So your FBAR, this is typical IRS sort of tax law, U.S. tax law. It's always a bit weird. It's due the 15th of April, but you have an automatic extension to the 15th of October. Automatic, you don't have to ask for it. So essentially, it's due the 15th of October. Your deadline as a person that lives outside the US is the 15th of June. You can extend it to the 15th of October, but you have an automatic, again, it's like the F-R, you don't have to do anything, you get 15th of June. If you're not ready, and quite often people aren't, because in Spain it's the 30th of June, you can extend to the 15th of October. And this year was 16th. If you owe any tax to the US, you have to pay by the 15th of April. So in some cases, if you've got dividend income or you have rental income from the US, you have to sort of, the way you do your tax return is a bit convoluted because you have to figure out first what you owe in the US based on what you think you'll owe in Spain. And I do that quite often because I have a good idea of what you would pay in Spain. And then you pay what you owe in the US. And then when you go to do your Spanish return, you take a credit for what you paid in the US. And once the Spanish return is done, then you can do your US return with the exact amounts of the credits that you'll take from Spain. So it's a bit convoluted, but essentially, if you do owe tax, you want to pay by 15th of April, or they will charge you interest. And interest now is 7%, so it's not nothing. The next slide, please. So who's going to owe tax to the US? Most people won't, unless you have US dividend income, or you have US property income, or you sell a property in the US. So for the most part, because of the treaty that Sonia referred to, there's no double taxation. It can happen in some rare instances, and you can open yourself up to it by doing certain things. But generally speaking, there's no double taxation. If you're on the Beckham law and you're paying 24% flat tax and you have quite a high income, there's a chance you will owe money to the U.S. because you're taxed on your worldwide income. So if your tax rate in the U.S. is 32% on the margin and your Spanish tax rate is 24%, and you're making, the number changes every year, but if it's €500,000, there's a good chance you may end up owing some tax to the U.S. That's income tax on your active income. If you're under Beckham law, you will owe tax to the U.S. if you have investment income, because, and Sonia can comment on this, under the Beckham law, to my knowledge, your investment income that comes from outside of Spain is not subject to tax in Spain.
Correct.
Anyway, moving on, the two ways that you sort of take advantage of not paying U.S. taxes is the first way is a foreign earned income exclusion. And that essentially is only on earned income, so only on self-employment or wage income, something where you're an active participant, not on passive income like rentals or interest or dividends. Essentially, your first $120,000 of income in U.S., you can exclude that. So if you earn under $120,000, it doesn't, like a lot of people think, it doesn't give you the, it doesn't absolve you of the responsibility to file a tax return, but you're never going to owe tax because you can exclude that from your income, so you can zero out your income. The other way, which in most cases is preferable when you're in a higher tax regime like Spain, is by using foreign tax credits, because normally if you're not on Beckham, Spain is going to have an income tax higher than what you would pay in the U.S. So, and you're not subject to any state income tax in the U.S. if you're not living there. So normally you will use foreign tax credits, and that's the preferable way because it also allows you to take some credits. There are refundable child tax credits that come from the U.S. that you wouldn't get if you don't have any earned income. And I won't go too deep into that, but if anyone has a question, you can ask me. Self-employment tax, if you're self-employed, the U.S. wants you to pay 15.3% of your self-employment income up to a certain level as Social Security. However, if you're self-employed in Spain, which is autónomo, you pay autónomos, and you don't pay in both places. So it's sort of like the tax treaty. It's a different treaty. It's called the Social Security Totalization Agreement, but it preempts you from having to pay this self-employment tax. If you were living in a place like, I'll just throw like a Singapore, where there is no treaty, you would be subject to U.S. self-employment tax. But if you're in Spain and you're paying autónomos, you do not owe self-employment tax. Next slide, please. So this is my last slide. So these are just some other forms that might be required. The 8938, it's also known as FATCA, which a lot of you might have heard, and you get this FATCA form from the Spanish bank sometimes to give them your social security number. FATCA is essentially, it's an FR that goes with your tax return. The thresholds are much higher, so a lot of people that have to file an FR do not have to file an 8938. If you don't have to file a tax return, if you earn no money, you don't have to file an 8938, whether or not you qualify, but you do have to file an FR. So the 8938 is a much higher threshold, and it goes with your tax return, and that to them is more, that goes to the IRS, and that's more of a link for the IRS to make sure that they know about your foreign assets, and they know that you're getting income from those foreign assets. The FR is for the U.S. Treasury. It's money laundering, it's terrorism, it's a different department of the government, but they both demand that information. A 3520, it comes into play a lot if you have a foreign trust, which are not that common. But if you inherit over $100,000 from a non-American, and I have plenty of clients who are American who were born in the U.S., but their parents aren't American, you have to declare that inheritance, even though it's not subject to U.S. tax, on that 3520 form. It's important because the fines on that form, if you don't do it, can be quite high. 5471 is another sort of similar. It's an informational return. Important. It's a complicated form. It's not a fun form to do. But if you own a controlled foreign corporation, which essentially is if you have over 50% ownership of an SL, a lot of Americans will open up an SL to do business in Spain. You've got to file that form. And there are tax ramifications, but at the current moment, it's more of a compliance issue because there's an exception for high tax payments, and that gets a little complicated. But essentially, if you're paying corporate tax in Spain, you will not owe any money through that form. It's called the guilty tax, and that's a whole nother conversation. But you have the responsibility to file the form. Another one you don't want to miss. If you only own 10%, well, over 10%, it's a one-time filing. So you have to file it every time you take on or shed more than 10% of the company. But if you're not, a majority owner, you only need to do that. Usually it's when the company opens and when the company closes, unless there's some movement in there. And my last point I want to make, and this kind of will lead into what Shane's going to talk about a little bit, is the 8621. So essentially, you do not, as a general rule, you do not want to invest in any managed funds outside of the U.S. And the reason is there are some complicated and onerous tax rules on this sort of thing. They're known as passive foreign investment companies. It's PFIC. If you're in the lingo of a tax person, we call it PFIC, and it's like a dirty word. You don't want to do it. You have to do this Form 8621 every year for these PFICs. The taxes are ridiculous, complicated. Again, if anyone has questions or want to send me an email, I can go further into it. It would take 20 minutes to kind of discuss it and explain it. But you really don't want to do it. And mostly because of the tax rules, and secondly because all these forms, if you're not doing it yourself, you have to pay someone to do it. And it just adds to your tax burden. So that's all I have to say. If anyone has questions, I think we're going to take questions afterwards.
Well, we'll step away from taxes for a minute then. I want to briefly talk about our firm, and then we'll jump right into some investment portfolio considerations. So my name is Shane Clark. I'm the president of EuroAmerican Financial Advisors. We're an investment advisory firm licensed in Spain. Our headquarters is in sunny Sevilla. And we provide financial planning services as well as investment advice. Our clients are almost exclusively U.S. citizens in Spain and Portugal. And my partner is here, Tom Zachystal. He runs our sister firm, International Asset Management. You've had that firm for over 21 years now. And it provides investment management services also for exclusively U.S. expats all around the globe. So with that, we will jump in. Some investment portfolio considerations, licensing. So you probably found that they're a little bit regulation heavy in the EU, and that doesn't change with us. So the licensing aspect, covers a lot of different topics, but for investment advisors, you're meant to be licensed where you're offering your services. So sometimes you can work with an advisor in the US, and if they don't have a license in the EU, eventually there's probably going to be a breakup. And one of the reasons that we started this firm is we tried to be a little bit forward thinking. We can see a time in the not so distant future where you have to have a license as a US based advisor to work with EU clients. So we're a little bit proactive on that front, and we think that it's important to understand the customs, the local taxes, all of the issues that we all face being expats. The next one is custody. Again, same theme, who can you work with? So as you may have experienced, oftentimes US custodians won't let you hold your accounts with them once you have a foreign address. Some people use a US address. There's complications with that we can talk about maybe at the bar afterwards. But really who you can work with. So which custodians are gonna let you hold an account with them and trade. Sometimes you can hold an account, but you can't trade it, they freeze it. Sometimes you can trade. We work with two different custodians, Interactive Brokers and Charles Schwab. Interactive Brokers, it's not the easiest kind of interface for clients, but they have multi-currency accounts. They trade on every exchange in the world. Charles Schwab has banking services, and they also have institutional and retail accounts. So if you go through an institution like our sister firm, International Asset Management, you can hold US-based exchange traded funds. So it's a nice way to get diversification that way. Another consideration, if you're kind of new to being an expat, is managing currency risk. Trading currencies, how do you move money? What are the best ways to do that? Let's talk about the first part, moving money. If you go to your bank and transfer it, it could be between 1% and 3%. They take a fee. You're probably familiar with companies like TransferWise, OFX, currency brokers. That's a good way to do it. We often use Interactive Brokers for our clients. They get the institutional rate. It's an easy way to move money, secure. You can buy multiple currencies that way. And then managing currency risk is another thing that, once you become an expat, it's kind of the old adage, you want to have your investments in the currency where your expenses are. Now, it's a little bit different living in the euro and having the US dollar as your kind of home currency. The US dollar being traditionally the strongest currency in the world, but it's something we need to manage in the portfolios. So we actively manage that for all the investments. Cross-border portfolio considerations, currency risk, and what can you buy? So Thomas talked a little bit about PFIX. I think he was pretty clear. We don't want to buy foreign mutual funds or exchange-traded funds. If you want to buy US exchange-traded funds, sometimes you can't in your accounts because they have to produce this, essentially it's a fact sheet that meets EU regulations. It's called the KID statement. And the US funds don't want to do that. So oftentimes you can't own these US exchange-traded funds unless you work with a registered investment advisor, have an institutional account. Mutual funds, you can't hold them from the US because they're technically treated as an investment company under the law, and they're not licensed in the EU either, where their product would be offered. So then you're left with having to choose a portfolio of stocks. That can be tricky. The next one is investment selections. So if you're left with choosing a portfolio of stocks, how do you do that? What's the best way to go about it? What can you buy? Individual stocks. In some cases, exchange-traded funds, individual bonds, and then which custodians will let you buy which products. I think we've talked a little bit about tax management. Sonia talked about wealth tax, how you can manage that situation to minimize your exposure there, and then making sure that you optimize your tax situation in Spain, your tax situation in the US, and your capital gains and income within your portfolio. Everything has to work together. So we try to have a broad view on all of those things, which actually brings us to the next slide. So the portfolio considerations, I think, you can optimize any part of these, let's call them pillars, individually: Spanish taxes, US portfolio, your financial plan. But unless you do it all together, think of it as like gears meeting each other, you're not really going to take advantage of the whole system. And that's something we try to do. We try to look at the broad, kind of holistic view and make sure everybody's working together and communicating on your team to have a cohesive picture. So if we look at this in layers, optimizing US tax and Spanish tax, ideally you'd want someone like Sonia working with Thomas to make sure everything's lining up there. The next one, investment selection and viewing fees with a holistic lens. Sometimes if you think, the advisor fee is too high, but then you're buying products that might be charging 1.5%, 2%. You have to take a holistic view and see what the total fee structure is. And the same thing on your investment selections, what underlying products have as embedded fees. Risk management, I think that, is very important once you become an expat as well in any investment portfolio. There's some additional concerns with the currency, with maybe change in lifestyle, change in expenses. That's why we always recommend our clients do a financial plan. And we think that helps inform the investment portfolio as well, how we approach your risk, how we approach your investment portfolio choices as well. And we offer all of our services as investment advice and financial planning. Some of you might be interested in portfolio management, creating the account as well. And that's something that our sister firm does, International Asset Management. I'll let my colleague Tom talk about that as well.
Right, so the good news for you is I don't have a slide. I just want to talk a little bit about, Shane mentioned we have the two firms, so in Spain it's EuroAmerican Financial Advisors, and that firm is licensed as an investment advisor under MiFID, which is a pan-European law, licensed here in Spain, but we can do what's called passporting into other European countries as well. And so that firm gives investment advice and does financial planning. So on the financial planning side, it's like Shane said, we'll work with Cuatrecasas or Sabadell or Wicklow Tax, Sneed, and give you kind of a holistic picture of financial plan, how you meet your financial goals. And there's sort of a number side to it where we do projections. It's like a personal income statement, cash flow, balance sheet, projecting into the future, incorporating whatever financial goals you may have. And then on the investment advice side, what the Spanish firm will do is they'll look at your situation and propose a portfolio of investments that's suitable for you, an asset allocation type approach to that. And then if you want, you can just take that and you can do your own thing if you prefer to manage your own account. But if you're looking for investment management services, then that's where the US firm comes in. So the US firm is what's called a registered investment advisor in the US. I started it 20 years ago. We've always dealt with expats. We have 90% of our clients are US citizens in about 35 countries. And we do the investment management side, or you can choose another investment manager as well if you want, but we give you a pretty good deal, 0.5% a year. That's a screaming deal. And so that's kind of how the two companies work together and what you can do and how we're licensed and so on. And just wanted to clarify that a little bit. And so now I'll pass it back to Shane for closing comments.
Yeah.
Or sorry, you're doing the closing comments.
It's okay. My part is the easiest part. So, as I told you before, we are in the Welcome Hub. This is a Welcome Hub branch, so thank you. I like moving, so sorry a lot because I hate being stuck. Sorry. What is a Welcome branch? A Welcome branch is a branch exclusively for international clients. Okay, if you would say what is the percentage of expats living in Barcelona, what do you think the number is?
29.
The 23% of population in Barcelona is expat. So that's why it took a lot of sense making this type of branch in Barcelona, which is the only one in whole Spain, the only one in Barcelona. So in here, where I'm the branch manager and Marta is the assistant branch manager, we try to help all the expat community who arrives in Barcelona, Barcelonians by choice, who we like to call them. And because we all know that when you go away and you want to live anywhere away from your real home, it's very difficult financially speaking, because normally it's not your language, normally no one wants to help you because you're a foreigner or whatever. So that's why it makes a lot of sense making this branch. What do we offer? We speak 10 different languages for all the expats, okay? We are a commercial bank, which includes also private banking in here. So we can offer absolutely everything, like bank accounts, mortgages, loans, rentings, leasings, investing funds, deposits, wherever, okay? And you have to think that we have like more than 80 collaborators, okay? So when an expat arrives here in Barcelona, and now we have new collaborators, if they come alone, okay, we can just introduce them to fiscal agents or real estate agents or notaries or lawyers or business schools or whatever they might need, okay? Because when you are new in the city, it's very difficult sometimes how to start, okay? So we are 15 people working in this office. The specialization in Banc Sabadell is very important. So in the office, we have specifically some types of specialities like mortgage specialists or international insurance specialists or investment specialists, and also tax specialities. So we try to help in 360 way all the clients that they want keep living here in Barcelona. I think that's all about the Welcome branch. So we left and EAFA also, we left some type of documents on the chairs. So please feel free to contact us or to just come or email or phone us if you have any question. And I think now is the turn for questions. I don't know if you have any other questions. Yeah.
So I already have an account with Thunderbird?
Nice.
Even though it's not this, is this an actual branch?
Yeah,
Or-
this is the natural branch for the international clients, yes.
Okay, because I didn't know that, I went through the relocation service, so they got me started, and good to know.
Okay, okay. Anything you need, you have my email, so just please feel free to write.
When it comes to the taxes, is it similar to where the US you have your top line and then you have perhaps some credits to get to your adjusted gross income? Is the Spanish tax law in the same fashion, or does it take your gross?
Yeah, so it's really the same thing. So basically, we take your income, right, and then you go through the tax rates, the different tax rates applicable. Is that what you're asking?
No, you could have, for example, if you're self-employed, you have half of it as a credit off do your gross amount.
Correct, we have the same thing.
Same thing. Okay.
Didn't enough with that.
Can someone enlighten us about what is Beckham law?
Have you heard, so Beckham is a football player?
Football player. Yeah.
Actually, football players
And then
cannot
like
apply the regime.
Not anymore.
Not anymore, it used to be the case that they could, but it's a particular tax regime that basically what it tries to do is to attract talented people who are living abroad to come to live to Spain. So if not, it's like a new client. When you're a new client, they give you a better deal than when you are an old client. So it's a little the same thing. You're sitting in the US, we think well, the talent is interesting for the country. So if you come for an employment reason, then you can actually benefit from 6 years, basically paying 24% on employment income.
Mm-hmm.
You don't pay taxes on savings income, so dividends, interest, capital gains, on the third thing, you don't pay taxes. And you only pay wealth taxes on Spanish assets. And then you have to come to Spain, and that's the tricky thing, because you are employed by a Spanish company, that's an easy one. You work remotely for a foreign company, that's new, and that's a possibility. But that foreign company, you cannot hold a majority stake. When you hold a majority stake in a company, basically you are not anymore an employee, because you are working for yourself. So when you hold, it depends, it's labor law, but 25%, 33%, 50%, you are no longer an employee, which means that you are not a remote worker, so you could not apply that option. And then there is also an option that if you set up a company in Spain where you are a director of that company, you also, so meaning that in that company, no, you're going to start a business, you also can apply the regime. So there are different ways, but it's not a regime that is basically, I come to Spain to retire, or I come to Spain because I like the country, and maybe one day I do something. Is I come to Spain because I have this project that I want to start. And then you set up your company, and then maybe, you set up the company, you are a director, you can apply the regime. I was saying, self-employed people, they cannot apply it. And then sometimes I get the question like, well, I set up a company, I provide the services through the company, but our rules say that you as a shareholder working for that company, you basically need to be remunerated, and that remuneration is a service. So therefore you're also out of the regime. And it's for 6 years.
Good, thank you. I don't qualify.
So all this long explanation for
Either way.
Okay. Regarding the wealth tax, can you, I think a lot of Americans have substantial assets in IRAs and 401k plans. Can you speak to how that, you mentioned it, how it's in theory, how is it also in practice if someone has $2-3 million in American assets in those instruments? How is it working in terms of taxation?
It's a very tricky question. So I think the 401s, they are easier because they are similar to a Spanish pension plan. Okay. In general terms, we have legislation that basically says the Spanish pension plans are exempt of wealth tax. Then the question is, what about the foreign pension plans? No. First, they have to be comparable to Spanish pension plans. If they are, why not a foreign pension plan? The position of the tax authorities and the tax authorities, they give us their opinion by tax rulings that they publish in the website of the Agencia Tributaria. They say none of them are exempt of wealth tax. We think the position is wrong. It's very narrow-minded, and we think it's against EU law. So if it would be an European pension plan, I would say I think that you have a very, very strong position that it should be exempt of wealth tax. When it comes to the US, it's a little bit more difficult because it's not EU, it's not EU law. And then first you have to, is it comparable? And then the occupational, the 401s clearly are quite comparable. The IRAs, my experience is that most of them, they are quite comparable. The Roth IRA, I think it's more difficult. But once you are there, the tax treaty between Spain and the US, it says that Spain will recognize US, all these products, will recognize them as pension plans. And the US will also recognize the Spanish pension plan as a pension plan. So the tax treaty says that, so that's a good starting point. The problem is that the treaty is about income tax, and so it's not about wealth tax.
So you're saying it's not clear?
Exactly, so then I'm saying, I think that there is a reportable position because the two countries have taken the position that they agree that this is comparable, these are pension plans. The liquidity of the product of the pension plan, I think it's a very strong feature to say that they are exempt of wealth tax. Why are they exempt of wealth tax? Because you cannot really take your money. So that's why they are exempt. So I think there is a reportable position, okay? But the tax authorities, their position would be, it's not exempt, and let's go to court, and I'm happy to take it to court and try to win the case, because we do think that there are legal grounds.
So in your practice, you treat them as if they're exempt, is that what you're saying?
Well, it depends on the client, the risk that the client wants to take. What I'm saying is that the tax authorities' position, because the tax rulings that the tax authorities publish in the website, they are binding to the tax authorities. So a tax auditor will have to apply that tax ruling. So they will say it's not exempt of wealth tax. And then we will have to go to court and win the case. I think they are legal grounds, I think so. I do think that it's a strong case to take to court. But of course, do I want to take a position that it might be challenged? And what is clear is when you get money out, it's employment income.
So just, I have a follow, so nobody's tested this in court yet?
No.
Okay. And is there, so in the US, we have this concept of a private letter ruling, do you know what that is, which kind of applies to just the individual?
Mhm.
Or then there's the global thing, do you have
Yeah,
that?
we only have the global.
Oh, only the global thing,
Yeah.
okay.
So then would required distribution, what is it, required minimum distributions be considered income?
Of an era?
Yes.
Yeah. Yeah.
And then what about, social security from the US?
No, not on the IRA, you mean?
No, if you, when you know, turn a certain age, you have to collect social security? That's
You are,
considered
it's a
income?
pension, it's a pension subject to, it's employment income, it's income, subject to tax.
So,
Um,
can I ask another way around? So, for people who work here and they contribute to Social Security, if they leave the country back to America, and if, for example, they are not present here, so apparently they can lose residence, what can happen to their pension?
I don't know the answer. Within the EU, clearly they accumulate the difference. So where you basically are retired, basically they accumulate all the contributions that you have made in different countries. I don't know in the US, I don't know if anyone has had the experience.
Sorry, what was the question again?
The question, for person working here, contributing to Social Security, then leaving the country, and for example, losing the residency here. If I'm not present here for 5 years, I can lose the residency, yes? What will happen to my pension?
The contributions
Here, pension
Yeah.
in Spain.
I don't know how it works.
Will it be lost, or can I eventually apply? Because the law says you can apply for the pension in Spain only if you are
A
resident
resident.
or citizen.
Exactly.
But apparently, then, does it mean that if
Yeah.
once you start receiving a pension here, you need to continue to be a resident
Yeah.
as well?
That's
So
why
you
in
can
the
live
EU
like,
they solve it.
you
but
can
I don't
get
know the
here
US.
and then you cannot get out eventually. That's,
It's a good question. Tom, are you still with us? Thomas, Sneed? Did you know anything about that?
I didn't hear it. I'm not hearing things
So the
very well.
lady-
Can you,
The lady's asking if she has a
Yes,
pension from
Spain.
Spain. Oh, sorry. If she has a pension from Spain, and then she leaves the country, she moves to the States, say, and what happens to the pension in Spain? Because to collect it, you're supposed to be a resident or a citizen, and now she isn't. Do you know anything about that, or?
you mean a state pension or just a private pension?
no, here, state, federal.
State
pension.
pension, Spanish state pension.
I mean, I think Sonia would know more than me. I don't see any reason why you wouldn't be able to collect it if you're not living in Spain.
Yeah, the problem, Thomas, is that you need to be a resident, and otherwise, within the EU, I was saying that this is solved, but I don't know with the US how you solve it, because you are no longer a resident, so you are not entitled to the pension.
Wow. Yeah, I did not know. I didn't know that. No, I mean, an American in Spain doesn't have that problem with Social Security. I don't know that answer.
Well, thanks for bringing that up, because we need to figure that one out.
No, actually, the same
Yeah,
problem
it's a good
for
question, but
people
it
who,
seems completely unfair, but
it's
maybe
actually
it's gotta go to
exactly the
court.
same situation for people who contribute Social Security in America, and if they leave and they don't have citizen or residence, they lose their pension.
No, they don't.
So,
No, you don't lose your Social Security if you leave the States normally. It depends which country you're in afterwards, to be honest, actually, but you generally might not lose it, right, Thomas?
no, you can transfer, but you will lose it as a
Spain,
pension.
I don't know any countries that they won't pay you
Yeah,
if you're living
they'll
outside.
pay it out.
You can transfer credits
Yeah.
if you don't have
And they'll
enough.
pay it directly to Spain, in a bank account in Spain.
Yeah.
You're,
Yeah, that's nice.
they may cut it. I mean, this isn't, I don't wanna get into this too heavy, but there's the windfall elimination provision, which essentially says if you're getting a Spanish state pension, because you live in Spain for 20 years, but you lived 20 years prior in the US, don't count on getting all that Social Security that they promise you, because they will cut it. And it's a complicated formula, but it's something to keep in mind if you're planning for retirement in Spain.
Since some of us may not be going to the bar afterwards, can you talk about the issues with a US address to maintain your IRAs, your taxable investment accounts with, say, Wells Fargo versus a Spanish address?
Yeah, I think there's a couple issues there. One, they might not let you maintain your accounts.
Right.
They might just send you the letter, you're out. If you do use a US address, you could be liable for state tax. If the state you're using has state tax. And there's ways around that. You can write the state tax authority a letter, explain the whole thing, but.
Yeah. Get an address in Washington State where there's no income tax.
There you go.
Yeah, but there's also a difference between if you've been living in the States and you've had the account there, and now you move to Spain, as compared to trying to open a US brokerage account from Spain. There's also a difference in that sense sometimes, right? So some of the US custodians will maybe let you keep the account even after you move to Spain. What they usually won't let you do though is if you have a managed account, quite often they won't talk to you anymore. And the other thing that sometimes happens is the account gets frozen, like Fidelity does this a lot. And frozen means that you can sell the investments in the account, but you can't buy new investments or reinvest dividends. So sometimes that happens too. So it just depends which custodian you're with. Schwab will deal with you living in Spain. Interactive Brokers will. Not a lot of the others will.
TIAA crap.
TIAA crap is horrible because they don't deal with anybody else. Well, first of all, they want to put you in annuities afterwards, but yeah, they're not very good at that. Yeah. Yeah, so you have like a 403B plan or something like that with them. Yeah, a lot of people do. Yeah, they're not the best at dealing with that kind of.
I can roll it over. So.
Yeah, you can roll it over to something at Schwab or whatever if you want to do that. Yeah.
What about Vanguard?
Vanguard, I don't know. So Vanguard is usually mutual funds. So right, so they have ETFs too. So the mutual funds, in theory, you should not be able to own them even because they're not, as Shane mentioned, they're not. You have to be registered where offered, as the saying goes, and they're being offered in Spain if you live here. So I'm not sure what Vanguard would do, but what I would do is, what I always advise people to do is call them up and say, hey, because maybe you're using a US address on the account, right? So you call them up and say, hey, I'm thinking about moving to Spain. What would that mean for me? Put it that way. And then find out what the answer is, and that at least gives you some time to deal with it, if you have to move the funds or something like that. But again, I'm not sure about Vanguard, to be honest. Yeah, because everybody has a different policy on it.
Yeah, I mean, they have IRAs. I have an inherited IRA there.
Yeah.
So you just trying to figure out what to do with.
Yeah, so I would suggest that, because sooner or later, if you're here permanently, you probably want to have the Spanish address on it, right? Yeah.
With all the nomad people and the expat people, do you foresee the big banks changing the policies like you're talking about in regards to having some sort of digital address?
The US banks?
Correct.
So the banks are less of a problem, usually. The brokerage firms are the big problem in terms, but from what I've seen, so far it's getting worse, not better. Because and mostly it has to do with this FATCA reporting. So, there's these FATCA treaties, and most of them so it started out that FATCA was like a way for the US IRS to find money that Americans were hiding abroad, the UBS thing in Switzerland and all that. And so they came up with this carrot and stick method, which is called FATCA, to basically compel non-US financial institutions to report on accounts held by Americans to the IRS. And so then these countries said, well, wait a minute, if we have to do that, then it has to be reciprocal. We might want to know what people who are living in Spain are hiding in the US. And the US is a great place to hide money because they have secrecy laws, right? And so these FATCA things are reciprocal, and the banks and brokerage firms, if they know you live in Spain, have to report to the Spanish tax authority. And they don't always want to do that, so that's the reason for it. But for the time being, at least, it's been getting worse, not better.
Okay. I was thinking like the people.
Go ahead.
Are they like the people with the van lives who are just cruising around all over the United States in their vans?
Oh yeah,
those people have some serious problems.
Well, if they're not citizens of anywhere, then probably the U.S. is. Then there'll be this concept of domicile, and then U.S. probably think, well, you're just a U.S. resident. Probably, I don't know what the answer to that is, but Yes.
For American citizens who decide to receive their social security payments here in Spain, do they have to have a dollar denominated account to receive those, or is the money sent and it's automatically transferred into euros and you pay for that service? How does that work?
I actually have a lead on that because I was gonna give a pitch to Roger. They've got a US dollar account.
Mhm.
And does that have separate numbers, so you can actually set up a US dollar account and
Yeah.
get your
But if you-
transfers directly in US dollars to your account? correct?
Actually,
But if-
they'll do it in euros.
They'll do it in what?
Go ahead, Tom.
Euros.
They'll do it in euros.
They'll do it in euros straight into your euro account, because I wouldn't want a dollar denominated account.
Yeah.
Except then you can control it, and they can actually give a pretty good interest rate that you can, the point is if you wanted to, it depends on how you want to manage it.
Well, I think it depends in every case.
Yeah.
I mean, probably sometimes people want to have their dollar account and make the exchange whenever they want, or others prefers just automatically just have a good rate and just have credited in euros. It
And Roger,
depends.
that's a
whenever-
separate number.
Yeah.
Separate account. So
Yeah.
Thomas, does that make we have to report both accounts on our treasury and our foreign bank account?
You mean if you have a euro and
Yeah.
USD account?
If you have if Sabadell, you have two different accounts, you have to report both of those.
If it's over $10,000 in total, yeah. So Tom, you're saying that the IRS will convert it and send it in euros?
The Social Security Administration, you're talking about Social Security,
Yeah,
right?
Social Security, sorry, yeah.
To my knowledge, they send it in euros to your euro account, and any account you have outside the US, you have to report. Even if there's zero in the account, you're supposed to report it. As long as your global amount is over 10,000. But yeah, my clients get their checks, their direct deposit to a Spanish bank account from Social Security.
Okay, thank you.
Yeah, going back to IRAs, how are interest and dividends that in the US just roll over internal to the IRA, how are they handled here? Is that counted as income or?
No, it stays within the IRA, only when you get monies out is when we tax you. And this is clear under the treaty between Spain and the US. So it's a federal mechanism.
But what about for purposes of wealth tax?
It's what we were discussing.
Same
that
thing,
it's,
yeah, it's a gray area,
subject-
it's still a
it's-
gray area,
yeah.
yeah.
According to the tax authorities, everything is subject to tax.
Sorry, if you have a bank account, say, I have my Saturday account here, do I have to report that I have $10,000 total in the account, or, because I bring money over from the US, but I never necessarily have $10,000 or more in that account, so how does that work?
you want to do. Keep it on.
Well,
I'm just saying, does it have to be 10,000 at one time, or does it?
It's not the transfer, it's the balance in the total of your non-US accounts.
Got it.
If it exceeds $10,000 in a year, right, Tom?
Yeah, based on the maximum value in the account. So you have to look at your max value for every account for the year, and if it's over 10,000, you do the part. And if it's not, you do.
For the year.
And at any time
At any time during the year, yeah.
Yeah, so
if
the max value
Yeah,
in the
it's
whole
the
year.
max value during the year, so you can't have like 9,000 at the end of the year and not declare it if you had 11,000 at one other point, yeah.
Because we have reporting obligations the other way around, that you have to report your US bank account. And we basically look or either at 31st December or the last quarter, the average of the last quarter. And then, this form 720, maybe you heard about it, if you have 20,000 euros and you have to declare it, or 50,000 euros, there are several rules. But it's basically at the end of the year.
I have a question, Thomas probably, but when FATCA first was announced, one of the draconian, or one of the really frustrating things was that if you had a bank account, a simple bank account here in Spain, I understood that was going to be considered a PFIC. I don't know if that changed or if the threshold came lower. And the second question that I had is that if at any point, if you had to file 5471 or an 8621, I understood that if in a company, if the aggregate amount of US citizens exceeded 50%, not just one person owned 50%, everybody who was on the board or a shareholder in the company had to report to Uncle Sam. Has this changed, or do you understand this to be the case?
Did you hear that, Tom?
Heard the second part, I think. I didn't hear the first part.
Well, the second part was the complicated one, so why don't you talk about that?
What I heard was, I think, talking about the 5471, a U.S. shareholder is defined by somebody who has over 10% holding in the company. So if you have American shareholders under that definition that add up to over 50%, then you have to do a 5471. You could have 11 American shareholders that own 9% each, and it's not, you don't have to do it. It's not a controlled foreign corporation. But if it's, it's a 10% holding that makes you considered what's defined as a U.S. shareholder.
Okay.
I hope that answers the question.
But that part I understood. But Thomas, it's more like, for example, I have a company with my friend Mark over here. And Mark, UK citizen, has nothing to do with the US. When FATCA first came out, if I owned, or US citizens combined owned more than 50% of the company, all the members of the board had to report to Uncle Sam. Is that still the case?
Did you hear that, Tom?
Yeah, I'm not sure. Can you explain, Tom, what he just said?
Well, I think, okay. It's so basically, when FATCA first came out, if the combined holdings of the US citizens amounted to over 50%, even if they had under 10% each, then everybody had to file a FATCA.
I would say that's not true.
That's
no,
not
it's
the
always
case
been
anymore.
10%.
Okay.
So, and maybe going way back, it hasn't, but essentially, that 10% shareholder rule has been around, to my knowledge, forever. So that's not the case. If it's, like I said, if you've got 6 shares, if nobody has over 10% or 10% or over, they're not considered U.S. shareholders. And it would be like owning shares in a big company, right? If it's not, because then it is not a controlled foreign corporation. The key is to define, is it a controlled foreign corporation?
Yeah, that would be the thing. If it's under 50%, it's not a CFC.
Well, that was a really controversial part. Because
But it got to count the U.S. shareholders, and if they have less than 10%, they are not a U.S. shareholder for those rules.
Right. The other question, I think, was at one point, even a Spanish bank account had to be reported as a PFIC. Is that what the question was?
they originally considered PFIC.
Yeah, I haven't heard that. No,
that was definitely the case. So all our hairs went on fire when we heard that.
Yeah. Well, that would be strange, because the last part of that is corporation, so. Okay. Okay. Any other questions?
Wondering a little bit about how you all work together or not. So right now, for years, I've worked with Thomas on the US side. So I have someone else working on this kind of Spanish tax side, have like investment management portfolio somewhere else, and all those are independent. And if you were all, the question is if you were all working together in some way where it's like, look, here's my situation, you pass it into the middle, and then somehow that communication takes place on your end, or is there anything like that, or what's the relationship, I guess, between you if someone were working with each of you in different capacities?
Well, I would say it's a budding relationship in the sense that, for example, we just started our firm, about a year ago. Cuatrecasas and Sabadell have been around forever, obviously. But so what we'll do on our side sometimes, though, for example, is because we're doing the financial planning side of it, is we'll be on calls with you. For example, you're having a call with somebody else, a tax advisor, or Thomas, or somebody else. And if you want us on the call, we might know better what questions to ask because we have other clients that have been through similar situations. And so in that sense, or the other sense might be, we get information that, hey, maybe we'd rather have capital gains than dividend income in the investment portfolio. So we'll take that into consideration. Or Sabadell, for example, they have a lot of products. If somebody's coming into the States, they can help you with like mortgages and open a bank account without an NIE, right? And all this kind of on a passport. And so we know about this, and and we might just pass you. In some cases, we'll just say, hey, go talk to this guy, that kind of a thing. So it really depends on what it is. At least that's kind of our side of it. I don't know if you have any comments on that.
I agree. I think that when you work together in different matters, you build a relationship and you have easy access, and we all share knowledge, but we do work separately. So, if you send me US staff, I basically say, well, send it to Thomas.
And the international ecosystem that we have in here, we are very low players. I mean, we all know all together in Barcelona, for example, and for all the expat community, so it's very easy to work and be combined whenever. So I think for the client, it's always the best.
Question and a plug. Thank you, Sabadell. And
You're welcome.
Because I work with Metropolitan, and we do surveys of what it's like to open a bank account for expats who are coming here. Your competitors often almost force Americans to have life insurance policy with their bank before they will open an account. And it's a huge frustration to the members of American society and to our clients at Metropolitan. You guys have not done that. You guys have been a big help ever since, so I wanted to say that. And also, you guys are going to be at the International Community Day tomorrow.
Yeah.
So if you have more questions, I want to plug for you guys for that.
Yes.
My question for Shane and Tom, what is a common mistake that expats make when they're trying to plan their investment considerations in this?
Yeah, I would say PFICs are always a big one. Thomas talks to us all the time about when he got into PFICs, he's got to get them out. It takes 200 hours of form filing and then back taxes, things like that. So we try to make sure we avoid any mistakes. And going to your question as well, us working together, I think having a big view on all the different areas is, risk mitigation, avoiding these types of problems. PFICs, buying life insurance that you might not need or that wouldn't cover you. So if you had US-based life insurance, if it didn't cover you over here.
Just to add to that, I'd say not so much a common mistake, but an important consideration. I'd say two things. First of all, going back to your question as well, working together. So we had a client who moved here from the States, and they're moving here permanently to retire. And they had a house, as you tend to have in the States, and then they're going to sell that house. And so the question is, do you sell it while you're still a U.S. tax resident, or do you sell it while you're after you've moved here, which a lot of people would sell it because it takes a while to sell a house. They might sell it while it's here. Well, that's a big consideration because the tax, in the U.S. we get a capital gains tax exemption when we sell that house, and here you kind of have to jump through some hoops, otherwise you're going to get taxed on it, right?
Yeah, well, you got to pay an exemption if you reinvest.
Yeah, you can reinvest into another house or that kind of a thing, and then another question comes up is, well, would you have to reinvest the whole purchase price? Or just the price minus the mortgage, which is what you're realizing, right? And so that was something we had to learn about, and it's something that people wouldn't normally think to ask, right? They would just do it. So that's where it's helpful to kind of work together and so on. But the other thing is that people tend to, especially if they're moving here, it's nice to learn about these things before you move.
Yes.
And that's a big mistake that people sometimes make. It's great to have like a tax consultation, estate planning consultation, investment consultation, before you actually become a Spanish tax resident and so on, before you're ready to move. Because there's things that can come up, like, you're dealing with fidelity, well, they're not gonna want to hold your accounts anymore, or the property issue. So I'd say that's an important thing to do as well.
I was going to say that coming here without an advisor
Yeah.
is probably a bad decision, because then you realize about taxes mainly that you did it wrong and then it's too late.
Yeah.
So normally we see it a lot, that they think that they don't need help and at the end they need it, yeah.
Yeah, and maybe what is difficult is to find these specialized people,
Mhm.
in the US or in Spain, anywhere. But if you find that people, it's really worth it. It's just a conversation, a lot of the things that I said today, I'm happy to say it in a conversation, a Zoom call, 1 hour, and then people, they don't make the mistakes. I'm thinking, for example, the other day, tax losses, Maybe when you were in the US, you generated tax losses, so you think, well, I will be able to use these tax losses in Spain. Well, no, because you generated them when you were still in the US. So before coming, try to use them. There are little things that really is worth it to have a conversation with someone, that knows this stuff, because it's not it's not super complicated. There are a few things that we have identified, as the things that really, with a little bit of advice, you can optimize. For me, it's this movement between spouses, that in the US is so easy to move things between spouses. I have seen a couple of big cases that they really involved a lot of money because people were not aware of that.
Okay, guess we should wrap it up.
Okay.
Yes, so thank you very much. Yes?
Can I ask, it's not about expats, it's about people who are still living in US. Do you help those people to buy property here?
Investors, yes. And in fact, for US citizens, it's very easy because we don't need compliance department to open the bank account. Sometimes it depends on the transparency, how transparent, fiscally speaking, the country is. So in this case, Europe and US, we don't need compliance department. So in 2 hours, your account is open. The only thing is we have to see the client once, because it's still too dangerous for non-residents to make it everything digitally. Okay, because we have to take care about our bank, but also for the client. So, but we have, for example, branches in Miami or in Mexico. So if the client cannot come here, they can go to Miami to sign all the contract. So it's okay. We try to do it the best of possible. And we were talking with Tom the other day. Normally we first make video conference. They are, I don't know, in California. We have lots of Californians now coming here in Spain because they can sell for 3, 4, 5 million of houses and come here and live. And so we do loads of video conferences at the beginning, and then once everything is established, they fly and we sign everything, so they have everything prepared, which I think is a good option.
So, and do you work also with living trust and with the companies who
Second.
Living trust or company who wants to buy property here? Can Sabadell help, or it's a different?
Yes, it's complicated, but yeah, it has to be a non-resident. I mean, this
Yes,
is just for
non-resident,
international
yes.
clients, yes. But as a non-resident, it's very weird that you, as a non-resident company, wants to buy with this company a
No, for
property here in
example, my
Spain.
children want to buy for me the flat.
I mean,
Not as a person.
you will
but
have to
like a
explain
living
very
trust.
well to the bank
Yeah.
why is the reason a non-resident company wants to buy a property here.
And a trust better, I mean, it's really
Yeah.
very hard that a trust owns a property directly in Spain.
Is it difficult?
Yeah, the registry will not register the trust
Mhm.
as the owner. Sorry.
Well, it's true. So, I mean, any bank will do it with a trust. Even with a non-resident company, it will be very complicated. But at the end, with a trust, the register, once you have to go to the register and register the property is yours, it's not going to be made because they won't recognize the trust as an entity.
No, not mine.
Yeah, but it really gets very messy. Sometimes they put the trustee, sometimes the settlor, sometimes the beneficiary. They will not put the trust itself. So it just creates legal uncertainty at the end when you are paying the tax. When you are selling, you don't know who is selling because you know in the US they will understand one thing, we in Spain something else. It's really not advisable at all.
And at the end, we will always help the client, but our first aim is we always need to understand that what the client is doing makes sense. You know, it's something that it's correct to be done. I don't know how to explain it. I mean, we it's like it's like cash movements, for example, right? In Spain, cash deposits or withdrawal loads or high amounts of money, this is not normal in here. You cannot go here and buy a car in cash, okay? And sometimes we have this difficulty here with the clients, not the US citizens from all over the world, it's my money. Yes, but it's mandatory for us to understand always the origin and the destination from every movement that goes in between banks and every individual and every company. So this is, very complicated. So at the end, it must have sense what you are doing. Makes sense? Yeah.
Okay.